We start with the biggest headline in the world right now, America's banking crisis. It's a financial contagion, to be precise. Two banks have gone bust, two major banks back to back. They failed over the weekend. First, the Silicon Valley Bank, and then the Signature Bank. This one is based in New York. Yesterday, regulators had to shut it down. And these are America's biggest bank failures since 2008. You may remember the Lehman Brothers story of 2008. It triggered a global financial crisis. So the question is history repeating itself? Is another Lehman-like episode in the making? The bank closures have spooked the world. There are reports of steep losses. America's biggest banks have taken a hit. Last week, they lost a staggering $100 billion. On Vantage tonight, we'll tell you what happened, why it happened, and whether you should be worried. Wherever in the world you're watching us from, does it impact you? We start with the Silicon Valley Bank. Some of you may not even have heard of it. But if you work in the American startup space, you know this bank is a big deal. Silicon Valley Bank, or SVB, is the banker to the American tech industry. It was opened in 1983. So Silicon Valley Bank worked with American startups, and it was among America's 20 biggest banks. Now it has collapsed. The question is why? And this is the interesting part. For a bank serving the tech industry, the SVB collapsed in a rather old-fashioned way. There was a bank run. People were taking out their money. The bank could not pay its depositors. It went broke, and so regulators had to shut it down. Next question, why could it not pay its depositors? Where did the money go? You could say this was a perfect storm. It began when the pandemic hit. The internet became the world's lifeline. So tech companies made money. They became more valuable. They grew in size. They raised funding. And where did they take this cash? The funds that they raised, where did they put this money? In the Silicon Valley Bank. Just look at the numbers. Between 2020 and 2022, bank deposits at SVB, Silicon Valley Bank, tripled. From $62 billion, they jumped to around $175 billion, which means Silicon Valley was flush with cash. And these were not complex deposits. It was just money lying in a bank account. Think of it like your savings account or a fixed deposit. These tech companies trusted SVB to take care of their cash. And what does a bank do with its cash? It gives out loans. That's how banks make money. They take cash from depositors like you and me, and they use this money to give out loans. They charge an interest on the loan, and they give depositors a smaller interest. The difference is the earning of the bank. That's how it works. Basically, banks charge a higher interest on a loan that you take from them and give a smaller interest on the money that you deposit with them. The difference is theirs to keep. So this bank, SVB, was sitting on a massive pile of cash. It had to pay interest to its depositors. And like any bank, it gave out loans. Do you know who got these loans? The American government. The SVB bought government bonds, US treasuries. It's the safest form of investment in the world. But for this bank, it turned out to be a mistake. Last year, when fears of a recession grew, the US Federal Reserve, that's America's central bank, hiked interest rates. This made these US treasuries less attractive. Their value went down. So SVB took a major loss on its holdings. And around the same time, something else was happening. The tech sector was also in crisis. The fear of recession dried up their funding. So these tech companies began dipping into their savings. They went to SVB and they withdrew their deposits. They took out their money. Do you see what was happening? The Silicon Valley Bank was being squeezed. On one hand, its investments were in a loss. On the other, its customers wanted their money back. The bank needed cash, so it decided to dump some of its bonds. This caused a loss of $1.8 billion. Suddenly, everyone was nervous. Next thing you know, SVB customers began lining up outside the bank. They all wanted their money back. By then, it was too late. The bank was insolvent. It was out of money. The regulators had to step in. They had to shut down the bank. This is the second biggest bank failure in the history of the US. SVB's customers are in distress.
We can't pay our vendors today. What happens when tens of thousands of companies can't pay their vendors anymore because they don't have cash in the bank? we're facing something much more than just my company potentially collapsing, but something economically very dramatic.
The British government is concerned too. That's because Silicon Valley Bank had a presence in the UK as well. HSBC acquired it today. UK Prime Minister Rishi Sunak is visiting the US. When he arrived, the bank failure was the first thing he brought up.
Well, I understand the concern that people have got around what's going on with Silicon Valley Bank. That's why I've been working with the Chancellor all weekend and indeed on the plane flight over, talking to the Bank of England and our regulators about finding the best solution. The government will have more to say on this very soon, but what I want to reassure people is that we will continue to support our world-beating tech sector and all the high-class jobs that it provides, but also that our financial system is resilient.
And that was just one part of the crisis. On Sunday, part two played out. US regulators were seen in action again. They shut down another bank, Signature Bank in New York. It is in no way related to SVB. Signature was already a distressed bank, but what happened at SVB precipitated its fall. Signature Bank had made bets on the crypto market. It suffered major losses. The bank had lost 40% of its value. Its owners were looking for a buyer. They were trying to shore up their finances, but they failed. So the regulators had to step in again, and the headlines went from bad to worse. Signature is the third biggest bank failure in American history. What does the US government say? The US Treasury Secretary is concerned.
You mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully. And when banks experience financial losses, it is and should be a matter of concern.
This is indeed a matter of concern. There is now a crisis of confidence. American banks have recorded major losses. Their stocks have nosedived. Last week, US banks lost $100 billion in value. European banks also saw losses. Their value declined by at least $50 billion. And what about the depositors? The good news is they will get their money back. That's because the deposits in these banks are insured. In fact, SVB depositors were supposed to get their money today. Those Signature Bank customers will have to wait, but they too will get their money. That's the assurance from Washington.
Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well.
But is that enough? What about the American banking system? There are doubts about its health now. The global markets are feeling the jitters. Asian markets opened in the red today. Indian markets suffered losses. Of course, there were other factors contributing to this. But the bank failures in the US dealt the worst blow. So should you be worried? Experts say while the developments are worrying, this may not be a repeat of the Lehman crisis, not yet. In the meantime, New Delhi is watching the developments in Washington. India's State Minister for Technology spoke out yesterday. His name is Rajiv Chandrasekhar. He will meet Indian startup founders this week. India will assess how the failure of Silicon Valley Bank may impact Indian startups. This is a developing story. We'll be tracking it for you.